If I mention the stock market, many of you are going to think of this. Trading and investing are two terms that are often talked about, but I think some people have the wrong idea of what they actually are, because they're two very different things. Hello, my name is Wajahat, welcome back to the channel. Today we're going to talk about trading and investing and just talk about some of the differences between them, because they're two very different things. I'm making this video because a few people have spoken to me about trading and investing and kind of got jumbled up with what they were. So hopefully today I can clarify what they are and why they're different. As always, if you want to make a lot of money, make sure you smash the like button for years and years of wealth and fortune. Let's get straight to it. To keep it simple, a trader is someone who buys and sells things like stocks, crypto, commodities quite frequently, and its main principle is to kind of make money through market volatility. That just means taking advantages of the fluctuations that the market has. For a trader, the fundamentals of what they're buying don't really matter, and it's more important about the timing of when to get in, but more importantly when to get out of a position. On the other hand, an investor is someone who puts their money into something long term, I'm talking maybe even years, and makes their money through market appreciation, which is different to market volatility. For investors, the fundamentals are very important, and therefore things like the cash flow, the market cap, the profitability of a company, the potential growth, the marketing, the competition. All these things plus more are really important in analyzing whether or not an investment is good. In a nutshell, that's the difference. Traders look at the price, investors look at the intrinsic value of what they're buying. Whilst these two factors are closely correlated with one another, they aren't the same, and it's important to know that. Let's take Apple as an example. Apple's stock price changes all the time, in fact on a daily basis. That can mean that, for an investor, Apple can be undervalued or it can be overvalued, and that's because investors look at Apple from its intrinsic value. Generally, investors are in it for the long run, and therefore fluctuations in the market, the kind of ups and downs that they get on a daily basis, don't really matter, because in the long run, they really don't make a difference. Small fluctuations over the course of years or even decades are very, very small. If you're trading Apple, you use a very different mindset. Trading Apple stocks is all about those minute fluctuations that you get on a day-to-day basis. When you're trading Apple, you want to take advantage of the buyers and sellers. You want to take advantage of any new information or news that comes out. You want to look at patterns, charts, graphs, and draw lots of lines. Let's talk about some more differences, and in particular, the difference in time. So when you're investing, you're typically holding the things that you're buying for a long time. I'm talking months, years, even decades. With investing, the thing with time is that once you've done your research, once you've got all your analysis, once you've purchased your stock or crypto or commodity, that's it. You don't really have to do much more apart from just kind of monitor what's going on, what's happening, etc. That means that typically it's a lot more passive, and you kind of can carry on with your day-to-day activities, your job or whatever you want to do, and you can kind of just leave that in the background to do its own thing over the years. I think there's also a difference with investors and their kind of mindset about time. One of the most famous investors of all time, Warren Buffett, says that if you're not prepared to invest for 10 years, don't even invest for 10 minutes. In terms of time, traders and trading positions are held for a much shorter time period. I'm talking, days, maybe minutes, sometimes hours, sometimes even seconds. Traders can be in and out of multiple positions every single day, and it's a much more kind of active thing to do. It requires a much greater time investment on your part, because you kind of got to be in front of your phone or your computer looking at these graphs, looking at new information, using that all together to figure out what's going to happen in the future. Therefore, trading is a much more active thing to do, whereas investing is a much more passive thing. Now, another difference between investors and traders is usually a big difference in risk. As you can imagine, with greater risk comes greater reward, and traders win that accolade. As a trader, you're trying to take advantage of market volatility, the ups and downs that come with whatever you're buying. Sometimes that can go amazing for you and you can make a lot of money, but also at times it can go very badly and you can lose a lot of money. I think it's kind of a skillful game, and those with the best skill set and knowledge typically win. As I mentioned, it's quite easy to lose a lot of money in the short term, but if you know what you're doing, the opposite is also true. You can make a lot of money in the short term by trading. Those who don't know what they're doing when they're trading lose a lot of money, and they're the stories that we often hear about. You see, investing, although it has some risk, is typically way less riskier than trading. Yes, of course, companies can collapse and go bankrupt, but this is something that's not going to just happen in a few seconds. This is something that you're probably going to know about and probably going to happen over a longer period of time. Typically when you're investing as well, you're going to have a wide range of investments. You're going to possibly be invested in things like index funds, and that is typically a lot less riskier. The potential upside is way less compared with trading, but then you're paying for that with the extra risk that you're taking on. In my personal experience, I've made 100%, 200% in literally just a matter of minutes, but at times I've also lost that, and that is the risk that comes with trading, whereas with investing, you're typically aiming for kind of steady gains over a longer period of time. There are also differences in the type of trader or investor that you are, and I'll kind of go over some of these as well. With traders, we have day traders and we have swing traders. Now, day traders are people who just kind of trade throughout the day but don't hold any positions overnight, whereas swing traders are people who kind of swing from one company to the next over a period of maybe a week or two and kind of jump in this kind of cyclical way. With investors, we typically have passive and active. Passive investors get into the market by buying instruments like index funds. Now, I've talked about index funds on the channel before, but they're kind of instruments that you can buy that reciprocate the general growth of the entire market as a whole. If you haven't watched my video about them, then definitely check them out. I'll leave a link in the description as well. With index funds, you're not going to become a millionaire overnight. It's not going to go insane overnight. It's more of a steady thing that you can use for your retirement or for a long period of time, something that you can buy into every single month, and will typically give you between 7 and 10% return on investment every year. Active investors are slightly different. They try and find undervalued companies and then try and invest in them, hold them for a while before moving on to other companies. It's similar to swing trading to some extent. Their main goal is to essentially outgrow the market and outperform various index funds like the S&P 500. So all in all, both trading and investing do require some level of financial competency, and I definitely recommend you learn before you earn. Personally, I don't think that one is better than the other. I think both should be used synergistically, and I personally use both all the time. If you've got any questions, then just drop them down in the comment section below. I'm happy to answer any time. Let's get rich together. I'm telling you, smash that like button and you will become wealthy. Make sure you smash the like button, subscribe to the channel as always. That's all I've got for you today. Good luck on your financial journey, and I'll be back with another video soon.